I'm Sarah Borkson-Keto here at the Hay Adams Hotel in Washington, D.C. for NAREIT's 2019 CEO Forum and Advocacy Day. Joining me today is Peter Baccile, President and CEO of First Industrial Realty Trust. Welcome, Peter.
Thank you. Thanks for having me.
So First Industrial Realty Trust recently released its 2018 results showing an occupancy rate of 98.5%, a record high. What are some of the challenges of meeting the demand for logistics real estate?
So we're certainly very happy with 98.5% occupancy. It is the highest that we've experienced in our history, and it's really a testament to the quality of our portfolio, the great work of the team, and the really strong markets that we're in today. And yes, as we look to accommodate tenants looking for additional space, sometimes there's a challenge. We can do it three ways. One is to sometimes move some tenants around a building or a park, creating new expansion opportunity for a tenant who needs more space. We can also sometimes add on to a building. We have a tenant in the southeastern Wisconsin market, Rust-Oleum, that we recently did an expansion for. They needed 850,000 square feet. They were in 600,000 square feet. So we expanded that building to accommodate their needs. And lastly, we can also go and find additional sites and do brand new build-to-suits depending on the tenant's timing and needs. We did that also recently with a tenant who needed 400,000 square feet. Our team in Atlanta went out and found a great site and was able to build a building there to meet the tenant's needs.
So First Industrial has a history of joint venture and co-investment relationships. How does that help you serve both customers and investors in the sector?
It is true that in the past, joint ventures were a part of First Industrial's business plan, but really since 2009, we focused on our wholly owned portfolio. In a sense, we've simplified our business since then, and we at one point had no joint ventures. This past year, we did enter into one joint venture, a 51-49 joint venture to acquire 532 acres in a submarket in Phoenix called PV 303 that we think is the best submarket there. That venture's strategy is really to sell some land, do some spec building, as well as build to suits. And so far that venture is going very well. And so we're really not in the JV business, but that particular opportunity allows us to grow the company and to grow exposure in a market that we like that's commensurate with the size of the portfolio.
Finally, what are your projections for acquisitions for the rest of this year?
Right, so in 2018, about $80 billion of industrial was sold in transactions over $5 million. Tough from our seat to figure what's going to happen in 2019, but certainly the weight of capital looking to find a home in industrial continues to be significant, and so we would expect similar volumes nationally. From a company standpoint, we don't really give guidance on what we think we're going to acquire, primarily because we're a profit shop and not a volume shop. And what that means is we want our people out looking for new opportunities to grow value and to grow cash flow, and not just looking to meet arbitrary requirements that may or may not lead us to strong transactions for our shareholders.
Peter, thank you so much.
Thank you.
And for more news and information on all things to do with REITs, be sure to visit REIT.com.